The big story tonight, the Indian IT industry is struggling, and the proof is in the numbers that Infosys has put out. For the second quarter performance, the numbers are above estimates. Net profits have grown at a higher than expected 5%, and that is helped by 3.4% growth in dollar revenues and a 3% growth in rupee revenues. However, one must remember that expectations had already been lowered after the company flagged off the cancellation of a big contract from RBS and cautioned about other client-specific headwinds. In fact, if you go back a couple of weeks, CNBC TV 18 had done a poll saying exactly that Infosys was going to lower its growth guidance. The additional evidence of a struggle comes in the company's guidance. For the second time in 2 quarters, FY17's revenue growth guidance has been cut, and this time to single digits, so between 8 to 9%. Rukmini Rao, Surabhi Upadhyay get you the highlights of Infosys' performance in Q2.
For Infosys CEO Vishal Sikka, the global slowdown in the banking, financial services and insurance space remains a major challenge. Despite performing better than widely expected across parameters in the second quarter of FY17, Sikka's team has once again had to tweak growth expectations. So FY17 revenue growth guidance, which was cut at the end of the first quarter from a range of 11.5% to 13.5% to 10.5% to 12%, has now been lowered even further to 8 to 9%. Sikka, however, says his team has taken long-term fundamental and structural headwinds into account, so the chances of getting blindsided by one are remote.
There are lots of factors that affect our performance. We had a major client where a large-scale program had an abrupt ramp down, which we are in the middle of now, which is RBS. And the other clients here and there where there are some ramp downs and things like this that affect our near-term performance. That is what is causing this impact. In addition, internally we have a couple of service lines where we are continuing to see a slower progress along the transformation that we need to achieve, in particular consulting and BPO. And so these are the things that we have been focusing on, and this is the reason that we see the guidance the way it is. If it changes, if we see the change, we will let you know, etc. So, but the important thing is that in the 2 fundamental areas of our transformation, which is the renewal of our core services, we have seen significant progress, and in the adoption of the new services, we have seen significant progress, and so therefore, quarter after quarter, that continues to be the case. It continues to improve, and I am excited about that.
The company has already flagged off some of these near-term hiccups, like the cancellation of its contract with RBS. It has also pointed to some stability in operations with volume growth of 4% and 80 basis points expansion in margins to 24.9% and a 200 basis points improvement in the utilization rate. Infosys has also maintained its FY17 margin outlook at 24 to 25%.
We have always said that in the medium term, we expect our operating margins to be in 24 to 26%. Margin is a product of 3 things, outcome of 3 things. One is the revenue growth. The second one is the pricing. The third one is really how much of operational efficiency factors could offset the impact of pricing and so on. So given that the revenue trajectory that we have indicated, so we believe that while in the medium term it will be 24 to 26, for fiscal 17, we see it in the range of 24 to 25.
This belief is bolstered by the fact that Infosys has added 78 clients in the second quarter. This takes its total active client roster to 1,136, with more to be added in the coming months.
The pipeline is good. The large deal pipeline is also fairly good. But again, this large deal thing is a seasonality thing. There is a element like last quarter we won 10 deals, this quarter 6 deals. If you look at it, maybe for quarter 4 it would have been a different number. So the cycle time for closing these deals is long. So sometimes many deals spill over to the next quarter. So it varies. But otherwise the pipeline is healthy.
Another thing Infosys has going for it is that it has managed to solve many of the problems it faced with execution in the first quarter. It now expects to script a turnaround in its consulting business in the next 2 to 4 quarters. All this has the street expecting Infosys to post a full-year growth number that betters that of rival TCS, especially because TCS's projected growth rate of 8% assumes a stronger third and fourth quarter, while Infosys's forecast assumes no growth in the next two quarters. With Rukmini Rao in Bengaluru, in Mumbai, Surabhi Upadhyay.